Base erosion and profit shifting, BEPS, is a term that refers to the tax planning strategies used by multinational enterprises to exploit gaps and mismatches in tax rules to avoid paying tax. This practice is particularly problematic for developing countries, which often rely heavily on corporate income tax to generate revenue. As a result, developing countries suffer disproportionately from base erosion and profit shifting, losing an estimated $100 to $240 billion in revenue annually. To address this issue, the OECD/G20 Inclusive Framework on Base Erosion and Profit Shifting, BEPS, has brought together 141 countries and jurisdictions to collaborate on the implementation of the BEPS package. The Base Erosion and Profit Shifting Package provides 15 actions that equip governments with the domestic and international instruments needed to tackle tax avoidance. These actions aim to ensure that profits are taxed where economic activities generating the profits are performed and where value is created. By reducing disputes over the application of international tax rules and standardizing compliance requirements, these tools also give businesses greater certainty. While the Base Erosion and Profit Shifting (BEPS) package is a step in the right direction, many African countries face unique challenges in implementing its provisions. National tax authorities in these countries are typically under-resourced and undertrained compared to multinational companies that employ teams of top lawyers and accountants. This unequal playing field puts African countries at a disadvantage in the fight against corporate tax avoidance. To level the playing field, some African countries have adopted innovative approaches to tackling tax avoidance. For example, Zambia has adopted what is called the sixth method. Rather than allowing corporations to report transfer prices based on a counterfactual transaction, this approach simply requires them to use the price of minerals listed on international commodity markets. The sixth method originated in Argentina in 2003, when the government was seeking to evaluate the sale of raw materials to related parties in countries with lower tax rates. It is a simplified version of the comparable uncontrolled price (CUP) transfer pricing method, designed specifically to limit the risk of transfer mispricing in commodity transactions. Nigeria has also taken steps to address tax avoidance through the introduction of the Companies Income Tax, Significant Economic Presence, Order, 2020, SEP Order. The SEP Order is a unilateral approach that seeks to bring non-resident companies that derive income from electronic commerce and digitalized activities in Nigeria within the tax net, as well as non-resident companies that provide technical, management, consultancy, or professional services to persons resident in Nigeria. In addition to these unilateral approaches, some experts have called for a unitary approach to taxation. This approach would treat a multinational corporate group as a single entity, with total global profits allocated to the countries where the company does business in proportion to genuine economic activity carried out by each subsidiary. In this way, corporate tax havens where there is little or no genuine economic activity would be cut out. Instead, countries where the resources are extracted or where significant staff are employed would be able to tax the share of global profits. This approach would allow African countries to raise the taxes that are rightly theirs, achieve the Sustainable Development Goals, reduce reliance on aid, and address inequality. In conclusion, corporate tax avoidance is a significant problem for African countries, but the Base Erosion and Profit Shifting (BEPS) package and innovative approaches like the sixth method and the Significant Economic Presence, Order, 2020, SEP Order offer some solutions. To truly level the playing field, a unitary approach to taxation may be necessary. By working together to address corporate tax avoidance, African countries can generate the revenue they need to promote sustainable development and reduce poverty. Thank you.